How's it going, my good friends of YouTube? It's Stas here. Welcome back to another video. So like you all saw in the title, we're going to be talking about the Fed, what Jerome Powell said this morning. I have a bunch of notes here on my iPad, so we're going to dive into it in this video, and we're going to break down some technicals on a couple of stocks I'm looking at and the overall markets to see how the markets are reacting to what happened this morning. So if you guys find value, smash the like button. Snag up your $50 from M1 Finance and your 2 stocks from Webull, link down below. And you guys can check out my Patreon as well, also linked down below. And with that being said, let's get right into the video. So we see here, SPY ended up shooting up from 447.65, that was at 9:50 a.m. on the East Coast, to where it is now, fresh all-time high at a little bit above $450. So just judging off of that, well, you gotta say to yourself, the Fed meeting or the Fed speech from Jerome Powell, it must have been good for the markets, right? Traders, investors out there, they liked what they heard. So let's talk about it. Federal Reserve Chairman Jerome Powell indicated today, Friday, that the central bank is likely to begin tapering before the end of the year. He said rate hikes aren't imminent as there is still, quote-unquote, much ground to cover before the economy hits full employment. And if you guys have been following Jerome Powell, the Fed, he's been saying this for months, probably over a year at this point, that his biggest goal is full employment, or at least one of his biggest goals is full employment. And if you guys remember, unemployment rate was like 13%, maybe 12%, I forget exactly the figure. And now it's at like what, 4 or 5%, which is a big improvement over the past couple of months, well, over a year at this point. And he also said the economy has reached a point where it no longer needs as much policy support. Hence why he's looking to taper, the Fed's looking to taper over the next couple of months here, or maybe by the end of the year, before the end of the year, which is what I said earlier in this video. That means the Fed likely will begin cutting the amount of bonds it buys each month, and right now it's right around 120 billion, right? Before the end of the year is likely where that is going to happen, as long as the economic progress continues. Based on statements from other Fed officials, a tapering announcement could come as soon, which is very soon, as the next Fed meeting, which is in the end of September, September 21st to September 22nd. And if that were to happen, I mean, your guess is as good as mine. How is the stock market going to react? I mean, I have no idea, but that is pretty soon, and I'm not sure they will taper in a month's time. I mean, that's very soon, but by November, December, could they? Absolutely, that could absolutely happen. And another thing he said, quote, the timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test, Powell said, and that was the end quote. Powell said this in his prepared remark for the virtual summit. He added that while inflation is this is so funny. He added that while inflation is solidly around the Fed's 2% target rate, which is just laughable. I mean, isn't inflation like 6% right now, 5%? But anyway, it's well above the 2% target rate. He said, quote, we have much ground to cover to reach maximum employment, end quote, which again is one of the biggest goals here, which is the second prong of the central bank's dual mandate and necessary before rate hikes happen. So pretty much we're looking at taper in the next couple of months. That is 100% what is happening. Now, I might have missed this, but what is the taper going to look like? Are they going to go from 120 billion to 110 billion and drop it by 5-10 billion every couple of months or every month? I have no idea. I don't know. Maybe I missed it. But what is this taper going to look like? That is my number one question. I doubt it's going to be drastic in terms of, okay, we're at 120 billion now. The next month we're at 80. Following, the next month following we're at 40. I doubt it that it's going to be like that. But I wouldn't be surprised if it was like, okay, 120 billion, 115 billion, 110, 100, over the next couple of months, quarters, whatever. That seems a bit more reasonable to me. And he also quoted, which he sounds like a broken record at this point. He's been saying this for over a year pretty much, or maybe not that long, but he says he still thinks that the current inflationary environment that we're in is transitory, which I'm not going to... Excuse me, guys. Jeez, J-Pal's got me choking on the camera. I'm not, and that sounded a little bit weird. Don't take that out of context. And we're not going to get into that because I've said before, I'm not crazy into the idea that the inflation is transitory. Sure, there are some bottlenecks in the supply chain, which is causing this. Potentially, but I feel like the mass amount of quantitative easing, the dollars being out there, 20-30% of the U.S. dollars being printed in 2020, that has to be a cause of the inflation as well, making it not as transitory as many would think. And again, that is such a crazy topic to get into. We'd have to make a video on it in and of itself. But overall, that is what I got from the Fed meeting. Tapering later this year, but they're not really too crazy on hiking interest rates quite yet. They're kind of playing that more by ear, and that is kind of why the market is running. The market would not like an interest rate hike in the next couple months. It would not like it. But it seems like it doesn't mind a bit of tapering in the next couple of months because, quite frankly, the market probably priced that in. The market probably expected that we weren't, or that we were going to see a little bit of a taper. So it's like, screw it. We're going to run anyway. So that's pretty much what happened, guys. I'd love to know what you think down below in the comments, as always. And if you're enjoying this video thus far, hit that like button. Make sure to subscribe so you don't miss any other content. And let's take a look at some stocks that I'm looking at. We already looked at SPY, how SPY is hitting an all-time high as we speak. I mean, we just hit 450.11. Now we're back to almost 450, so we might be running to another all-time high. So this looks very good. SPY does, at least for the bulls. I mean, the bears are getting slaughtered right now. A couple of other stocks I'm looking at. JWN is one that I'm personally in right now. Bought this yesterday at roughly 28.90, I believe, is where I bought. Now we're at 29.60. So I'm up a good chunk on my position, about 1.5 to 2% as of now. And this is a relief rally play for me. I'm looking at this as a play off of the bottom of this channel. Let me redraw it so you guys can see for yourselves. And I've covered this before, not to beat a dead horse, but, I'm looking at this for a play back up, maybe to the low mid 30s. And I'm also keeping an eye here on CCL. CCL is moving up quite nicely. Today it's up about 4%. Trading above the moving averages. We took out the high from, earlier this week and a couple of weeks ago. Now we're about to break, or should I say test, maybe we break 2450. Oh, I almost knocked my computer over there. 2450. That is the high, or rather the low support point for March throughout the middle of May, which is now resistance. So I think if we break 2450, there's upside, $25, $26, $27 on CCL. And if you guys look at my watch list here, we have a lot of stocks in the green today. Go figure, right? I mean, most of my stocks are green today. The only red ones are GameStop, NEO, Urban Outfitters, AMC, SoFi, which I might buy more SoFi, and Alibaba, which I did buy more Alibaba earlier. We're noticing Mara is doing pretty well today. Mara is testing that big level of resistance at $39.80, $40. That was a resistance back in the end of April, and now we're squeezing above it. We're trying to, at least, maybe the ascending triangle will pan out here. If it breaks 40, we might get that big leg up, 45, maybe 50 bucks again. Very possible. So overall, guys, that is it. Those are a couple of stocks I'm looking at, a rundown of what happened with the Fed, Jerome Powell. Hope you guys enjoyed this video. If you did, hit the like button, subscribe, drop me a comment, and check out my Patreon. If you guys want to join, make sure to check the link down below. You get all my buys, sells, call outs, a morning update video, all that good stuff, all on Patreon, plus more. And if you sign up today, you will be charged today, August 27th and September 1st. So if you sign up, shoot me a DM, and I will refund you instantly your payment for August 27th, so you're not being double charged, right? Because what's the point of paying for the whole month of August if it's already August 27th and you're going to be charged again on September 1st? So shoot me a DM. I'll refund you on Patreon there. And make sure to get your 50 bucks from M1 Finance, your 2 stocks from Webull, up to $1,600, free money. Those are linked down below as well. I'll catch you guys in the next video, which, if you want to see an example of a morning update video that I do exclusively on Patreon, check out my video from this morning. I uploaded it on YouTube. I'll pop it up here. Check it out. Hit that. I'll see you there. Keep crushing the market. Stay safe out there, guys. Peace out.